Before we placed a single sanction on their oil, before we froze their first bank account, before we thought we could strangle their economy into submission, Iran was generating about $16 billion a year from oil exports in 2020. Manageable, trackable, controllable. Today, despite decades of the most comprehensive sanctions regime ever imposed on a nation, Iran moves over $50 billion annually, according to U.S. Energy Information Administration estimates from 2023. The mechanism, a shadow fleet of aging tankers, shell companies spanning multiple continents, and cryptocurrency wallets that didn't exist when sanctions first started. And here's the part that should keep you awake at night. The Islamic Revolutionary Guard Corps, designated as a foreign organization by the United States, appears to control roughly half of those exports based on Western intelligence estimates. They're not just circumventing sanctions. The evidence suggests they're profiting from them. This is the story of how the world's most sophisticated economic weapon may have become the funding mechanism for one of the largest proxy networks in modern history. This is how we might have accidentally built Iran's shadow war machine while trying to dismantle it. The numbers tell a stark story. The U.S. State Department estimates from 2020 suggest $700 million flows to Hezbollah annually. Intelligence assessments indicate 70 to 100 million reaches Hamas each year. Tens of millions reportedly armed the Houthis. Iraqi militias receive their allocations. Treasury Department sanctions documents trace these funds back to one primary source: Iranian oil that sanctions were designed to stop decades ago. But to understand how sanctions may have become Iran's greatest revenue stream, we need to go back to when oil was simpler, when tracking it seemed possible, and when the Revolutionary Guards were primarily a military organization, not the economic entity they appear to have become. The system we're about to expose isn't just sanctions evasion. Based on maritime tracking data and treasury designations, it appears to be a complete parallel economy, operating with remarkable visibility, moving millions of barrels every month, and the operators seem more sophisticated now than ever, because every enforcement action appears to teach them new evasion methods. Let me show you how oil became currency in modern proxy warfare, and how efforts to control it may have created the exact opposite of what was intended. 1979, the Iranian Revolution changes everything, and within months, American diplomats become hostages in Tehran. The United States responds the way it typically does to hostile regimes: sanctions, freeze their assets, ban their imports, cut them off from the global financial system. $12 billion in Iranian assets frozen. Iranian oil exports to the United States stop. The intended message is clear: comply or face economic isolation. But here's what the architects of those early sanctions may not have fully anticipated about oil. It's not like most other commodities. It can't simply disappear from global markets, and when you block one buyer, others often start making offers, typically at a discount. Iran appears to have learned this lesson quickly. Through the 1980s and 90s, sanctions existed, but they remained somewhat manageable from Iran's perspective. Iran continued selling oil to Europe, to Asia, to buyers willing to overlook U.S. restrictions. The revenue sustained the regime, helped fund operations during the Iran-Iraq War, and laid groundwork for what would later become the Revolutionary Guard Corps' expanding economic role. But the trade remained relatively transparent during this period. Tankers generally flew Iranian flags. Most sales went through the National Iranian Oil Company. The international community had reasonable visibility into where Iranian oil came from and where it was heading. Then comes 2005. The International Atomic Energy Agency reports that Iran was not in full compliance with its international nuclear obligations. The nuclear question becomes global, and the dynamic shifts entirely. The United Nations Security Council passes multiple resolutions. By 2006, Iran faces international sanctions, not just American ones. By 2010, the pressure expands significantly. The United States Congress passes the Comprehensive Iran Sanctions, Accountability, and Divestment Act. Here's what made these sanctions different from earlier measures. These weren't just primary sanctions prohibiting Americans from doing business with Iran. These were secondary sanctions, threatening anyone, anywhere in the world who engaged with Iranian oil. Companies wanting to ensure tankers carrying Iranian crude faced sanctions. Financial institutions processing payments risked losing access to U.S. banking systems. Firms investing in Iran's oil fields could face exclusion from the American market. European companies began pulling out. Asian refineries grew cautious. Iran's official oil exports dropped from approximately 2.5 million barrels per day to under 1 million, according to tracking data. Government revenue fell sharply. The Iranian rial lost significant value. Inflation exceeded 30%. On paper, sanctions appeared to be working as designed. Iran faced economic isolation. Their oil had become extremely difficult to sell through legitimate channels. The economic pressure seemed poised to force policy changes. The Obama administration watched these indicators and concluded they'd built sufficient pressure to bring Iran to negotiations. This assessment proved partially correct. In 2015, Iran signed the Joint Comprehensive Plan of Action, the nuclear deal, sanctions relief in exchange for nuclear program restrictions. But while diplomats celebrated in Vienna, something else was developing in the shadows, something that would fundamentally reshape how Iran funded its operations. The Revolutionary Guard Corps was discovering opportunities within the sanctions regime, because here's the pattern that was already becoming apparent by 2015. When you make something difficult through legal channels, you don't necessarily eliminate it. You may simply make it more valuable in underground markets, and you potentially hand advantages to whoever is willing to operate outside traditional systems. The IRGC had been involved in Iran's economy for years, running construction companies, controlling ports, managing various commercial networks. But oil had always been primarily the domain of the National Iranian Oil Company, a civilian entity. The sanctions environment appears to have shifted this dynamic. When Western pressure made legitimate oil sales increasingly difficult, when traditional buyers started backing away, when operations needed to move into less transparent channels, the government made a decision that would have far-reaching consequences. They began giving oil allocations directly to the IRGC, not cash transfers, actual barrels of crude. The implicit instruction monetized this for defense purposes. This decision, documented in Iranian budget allocations, though rarely discussed in detail publicly, created the foundation for what would follow. The IRGC didn't just have authorization to sell oil. Based on their existing infrastructure and international connections, they were arguably better positioned than civilian agencies to operate in sanctioned environments. Then Trump pulls out of the nuclear deal in 2018, and maximum pressure returns. Iran's official exports face renewed restrictions. Every tanker potentially tracked, every buyer potentially sanctioned, every payment potentially blocked. The goal appears clear: drive Iranian oil exports toward zero. And this is where the real transformation begins, because Iran's exports didn't stop, they adapted. Let me describe what this adaptation looks like. It's not one simple workaround. Based on Treasury Department sanctions documents and maritime tracking data, it appears to be a sophisticated system built incrementally over years of pressure, and evidence suggests the IRGC plays a central coordinating role. Start with the tankers. Iran's official fleet faces sanctions and intensive tracking. So what appears to have developed is a shadow fleet. These aren't new ships. Maritime analysts have identified aging tankers acquired near the end of their commercial viability. Vessels that Western insurers wouldn't typically cover anyway. 30-year-old hulls registered under flags of convenience in jurisdictions like Panama, Marshall Islands, and Palau, where registration processes are relatively streamlined and oversight may be limited. These ships typically have no obvious connection to Iran in their ownership documents. They're registered to shell companies in Dubai, Hong Kong, and Singapore, managed by entities that often exist primarily as offshore addresses. The same vessel might change its name multiple times within a year, get repainted, switch flag registrations. Treasury documents show one vessel designated as the Odessa, later operating as the skipper. What was the Anthea became the Siri. By the time sanctions target one identity, the ship may already be operating under another. But the sophistication goes beyond just changing names. Every commercial vessel carries an automatic identification system transponder. It broadcasts location, speed, and destination. It's how the global shipping industry tracks cargo. It's also how enforcement agencies monitor Iranian oil movements. So, according to maritime security reports, vessels in the shadow fleet routinely disable these transponders. They go dark. A tanker loads crude at Iran's Bandar Abbas port, sails into the Persian Gulf, and its AI signal stops broadcasting. For days, sometimes weeks, it's invisible to standard tracking systems. When the signal reactivates, the ship might suddenly show a position thousands of miles from its actual location, broadcasting that it's carrying Iraqi oil, not Iranian. Or the signals get manipulated, transmitting false coordinates, claiming to be anchored off Dubai while actually conducting what's called a ship-to-ship transfer in the Gulf of Oman. Tankers meet in international waters, pump crude from one vessel to another, typically at night, often in conditions that would violate standard maritime safety protocols. By the time anyone analyzes the AI's data gap, the Iranian tanker has returned home, and the receiving vessel is en route to China with crude that now carries forged certificates, claiming origins elsewhere. United Against Nuclear Iran, a monitoring group, has identified over 470 tankers involved in what appears to be Iranian oil smuggling operations. As of late 2024, some are explicitly sanctioned. Many operate in regulatory gray areas. The common thread seems to be their role in moving crude that sanctions were designed to stop. And who coordinates this? Treasury designations point to front companies allegedly run by IRGC-linked operatives. Take Sepir Energy, designated by Treasury as a front for Iran's armed forces general staff. According to Treasury documents, networks like this manage vessel contracts, arrange transfers, and produce or distribute falsified documentation. One coordinated network potentially moving crude worth hundreds of millions. But moving oil addresses only half the challenge. You still need buyers. And this is where the second component of the system becomes visible: the market. China represents the destination for most Iranian crude, according to commodity tracking firms, not through Chinese state entities officially. The buyers appear to be small, independent refineries in Shandong province. The so-called teapot refiners, these facilities process cheaper crude, and Iranian oil reportedly comes at substantial discounts, $10 to $30 below market price per barrel. That discount likely represents Iran's cost of operating in sanctioned markets. Based on media reports and sanctions documents, these refineries appear aware of the oil's origins. But the accompanying documentation claims it's Iraqi crude or Omani. Certificates of origin have been found to be forged, shipping invoices falsified. By the time oil reaches port, it may have been transferred and redocumented enough times that proving Iranian origin becomes bureaucratically complex. Treasury has tried to intervene. They've sanctioned terminal operators. In 2025 alone, they've designated multiple Chinese port facilities in Qingdao Port, oil products among them. Entities that reportedly processed tens of millions of barrels of Iranian crude. But new terminals appear. New intermediaries emerge. The network seems to adapt faster than enforcement can maintain pace. And here's the critical detail. Western intelligence estimates suggest the IRGC doesn't just facilitate this system, they may control up to 50% of all Iranian oil exports. According to analysis, based on intelligence documents and shipping activity monitoring, 50%. They've evolved from a military organization into what appears to be a major oil export operation, with military capabilities attached. But the system's most sophisticated element may be how Iran actually receives payment. Traditional oil sales run through banks, letters of credit, wire transfers, the SWIFT system, all trackable, sanctionable, interceptable. So Iran appears to have largely stopped using traditional banking for oil proceeds. Exchange houses in Dubai and Iraq have emerged as primary payment processors according to Treasury enforcement actions, not banks. Money service businesses operating in less regulated spaces. Treasury has designated entities like Suede, Sons in Yemen, and numerous operations across the country. These reportedly handle billions in transactions for Iranian oil sales, converting proceeds into various instruments from cash to digital assets. Treasury exposed one network in 2018, Iranian oil shipped to Syria with assistance from Russian companies, according to the designation documents. The Assad regime reportedly paid in cash. That cash went to the IRGC. The IRGC then allegedly distributed funds to Hezbollah and Hamas, oil for conflict funding. This wasn't described as a one-time arrangement. The evidence suggested an ongoing business model. And when physical cash becomes too risky or inefficient, there appears to be a shift toward digital assets. Tether, a cryptocurrency company, conducted what was described as its largest Iran-linked asset freeze in July 2025. 42 addresses, most with connections to Novatex, an Iranian cryptocurrency exchange that had reportedly become a channel for sanctions evasion. The freeze apparently triggered a visible adaptation. Iranian wallet addresses appeared to pivot from Tron USDT to DAI on Polygon, from more centralized platforms to more decentralized ones, from more controllable to more censorship-resistant. Iran's government has even officially authorized cryptocurrency mining domestically, requiring miners to sell Bitcoin to the state for use in sanctioned imports, according to media reports. A regime that once viewed cryptocurrency skeptically now appears to see it as a sanctions evasion tool, because every traditional choke point that gets closed appears to trigger adaptation to alternative channels. This is architecture as best we can understand it from public enforcement documents. Shadow fleet, forged documentation, teapot refiners, exchange houses, cryptocurrency, much of it appears coordinated through IRGC-linked networks, all of it generating billions. And the scale of this system would likely be much smaller without sanctions, creating the economic incentives to build it. We pushed Iran into the shadows, and in the shadows, they appear to have built something substantial. Now let me show you what this system appears to fund, because this isn't just about Iran collecting revenue. This is about how shadow oil money translates into regional conflict capabilities. The IRGC's budget comes significantly from direct oil allocations, according to Iranian budget documents, not cash appropriations, actual crude. In Iran's 2025 budget, the government allocated 1/3 of all oil exports directly to armed forces, $12.4 billion worth based on projected export volumes, triple the allocation from the previous year. That crude doesn't flow through the National Iranian Oil Company. Budget documents indicate it goes directly to military entities, including the IRGC, 600,000 barrels per day, according to budget projections. Every day, even with discounted sales prices, that potentially generates over $13 billion annually for military purposes. And these entities don't publish detailed budgets. They don't report to Parliament in the same way civilian agencies do. This money flows into what Iranian economic analysts call the shadow economy, dominated by military and supreme leader-affiliated entities that reportedly control nearly half of Iran's informal economic activity. Where does it go? Based on U.S. government estimates and sanctions documents, let's trace the money. Hezbollah. The State Department estimated in 2020 that Iran provides $700 million to $1 billion to Hezbollah annually. Multiple Treasury designations have targeted networks specifically for moving oil proceeds to Hezbollah. Mohammed Qasser, identified as a Hezbollah official. Mohammed al-Chwiki, identified as a Syria-based operative. Treasury documents describe them as running an operation that shipped Iranian crude to Syria, collected cash proceeds from Assad's regime, and distributed funds to Hezbollah. $700 million provides significant capability. Hezbollah's arsenal is estimated at 150,000 rockets and missiles, not improvised weapons, Iranian-manufactured Fajr-5 missiles with ranges that can reach major Israeli cities. Advanced drone systems, communications, infrastructure, all reportedly funded substantially by oil revenue that sanctions were designed to eliminate. Hamas receives an estimated $70 to $100 million annually, according to U.S. and Israeli officials. Hamas leader Ismail Haniyeh confirmed a $70 million figure in a 2022 interview. Treasury has designated multiple individuals for transferring these funds. Mohammed Sarur identified as working between IRGC Quds Force and Hamas. Mohammed Nasrallah, described as a Hamas operative in Qatar, handling tens of millions in transfers. The events of October 7, 2023, which resulted in over 1,200 casualties, were executed by a Hamas that had been training and equipping itself with Iranian financial backing for years, according to intelligence assessments. While agencies found no evidence Iran orchestrated that specific operation, the decades of funding had built the capability to launch it. The Houthis in Yemen represent another funding channel, said Al-Jamal, identified as an IRGC operative, reportedly ran oil smuggling and money laundering operations that generated tens of millions for the Houthi organization. According to Treasury designations, he allegedly used exchange houses like Swade & Sons to transfer funds. facilitated Iranian fuel shipments, built financial infrastructure that enabled the Houthis to evolve from a regional militant group to an organization capable of launching ballistic missiles at commercial shipping in the Red Sea. In Iraq, multiple militia groups receive Iranian support: Kataib Hezbollah, Harakat al-Nujaba, Asaib, al-Haq. These groups gained combat experience fighting ISIS from 2014 to 2017, reportedly with Iranian funding and training. Now, they periodically target U.S. forces in Iraq and Syria. The IRGC Quds Force reportedly coordinates their operations, and oil revenue appears to help fund their activities. When you add it up, we're looking at over $1 billion flowing annually to proxy organizations across Lebanon, Gaza, Yemen, Iraq, and Syria, based on government estimates and sanctions documents, an extensive regional network coordinated to varying degrees, running substantially on Iranian oil money that sanctions were designed to cut off. This isn't just about funding, this appears to be about strategic positioning. Iran can't compete with Israel or Saudi Arabia or the United States in conventional military confrontation. Direct conflict would likely mean defeat. So the approach appears to be different. Fund proxies create operational distance. Wage conflict through Hezbollah in Lebanon, through the Houthis in Yemen, through Iraqi militias, through Hamas in Gaza. And the financial engine making this strategy feasible appears to be oil revenue from a shadow fleet we can track, but struggle to stop, sold to buyers we can sanction, but who continue purchasing processed through channels we can designate, but that multiply faster than targeting can keep pace. This raises an uncomfortable question. Did sanctions defund Iran's regional activities? Or did they inadvertently create the conditions that enabled them to expand? Because the IRGC's share of oil revenue has reportedly increased, not decreased, under maximum pressure. They controlled an estimated 20% of exports 3 years ago. Intelligence estimates now put it around 50%. The tighter the pressure on legitimate economy channels, the more control appears to flow to entities operating in shadows. And in shadow economy operations, the Revolutionary Guard appears to have significant advantages. This is the consequence that may not have been fully anticipated. We built a system intended to isolate Iran. Evidence suggests we instead built a system that enriched the specific entities we wanted to weaken, the ones funding proxy networks, the ones developing missile capabilities, the ones maintaining the regime's hardline regional policies, and the model is apparently spreading. Iran's sanctions evasion approach has become something of a case study for other sanctioned regimes. Based on media reports and policy analysis, Russia, facing its own oil sanctions after invading Ukraine, appears to be employing Iranian tactics. Shadow fleet operations, ship-to-ship transfers, falsified documentation. There are reports of coordination. Russian companies were mentioned in treasury documents about helping move Iranian oil to Syria. Iranian experience may be informing Russian sanctions evasion approaches. Venezuela, also under U.S. sanctions, seems to have studied Iran's methods. North Korea, the world's most isolated economy, appears to watch how Iran moves money and adapts techniques. We didn't just fail to stop Iran. We may have accidentally created a playbook in sanctions evasion that other sanctioned states are now referencing. The infrastructure Iran built, the networks, the shell companies, the cryptocurrency channels, they exist now as functioning systems. Even if Iran's government changed tomorrow, even if they signed comprehensive agreements, the operational infrastructure remains. The IRGC has a revenue stream that appears substantially independent of an Iranian state budget controls. They have operational autonomy. They have billions flowing annually, and they've used those resources to reshape aspects of regional dynamics. Hezbollah isn't just a militia anymore. It's a political party in Lebanon with an arsenal estimated larger than many national militaries. The Houthis aren't just rebels. They effectively govern northern Yemen and can launch attacks that affect global shipping. Hamas isn't just a resistance movement. It governs Gaza and demonstrates capability for significant military operations. All of them exist in their current form, at least partly, because Iran had resources to fund them. And Iran had those resources because, paradoxically, sanctions may have created black market conditions more financially favorable than legal markets had been. This raises questions about the modern impact. When you fill your gas tank and see prices fluctuating, part of that calculation involves Iranian oil entering Chinese refineries at discounts, affecting global supply dynamics. When shipping insurance rates spike for Red Sea transit, that's partly the cost of Houthi capabilities funded by Iranian oil money. When conflicts escalate in Lebanon or Syria, they often involve assets purchased with revenue from shadow fleet operations. The global financial system has adapted in response. SWIFT expelled Iranian banks, which was supposed to be crippling. It was disruptive. Iran built alternative payment mechanisms. China and Russia have explored developing alternatives to dollar-denominated trade, partly to reduce U.S. sanctions exposure. The International Maritime Organization is tightening rules on eyes manipulation because of tactics developed in Iranian oil transport. Insurance companies are implementing enhanced due diligence on tanker charters. Port states face pressure to deflag vessels involved in sanctions evasion. Panama and Tanzania have lost hundreds of vessel registrations due to Iran connections. But enforcement remains inherently reactive. Iran adapts, we counter, they adapt again, we counter that. It's a dynamic we appear to be perpetually behind in because they only need to find one working channel, while enforcement needs to close all of them simultaneously, and the billions keep flowing. Dollar dominance that gives U.S. sanctions their power faces pressure partly due to this dynamic. When we leverage the dollar as an economic weapon, other countries explore alternatives. China develops payment systems. BRICS nations discuss trading in local currencies. Iran, by being forced outside the dollar system, became an early adopter of post-dollar trade mechanisms. That has implications extending far beyond oil sanctions. And here's what connects this to today's global power structures. Iran's experience demonstrates that in the 21st century, economic isolation doesn't necessarily equal strategic defeat. If you have a commodity global market need, if you're willing to operate outside traditional systems, if you can build alternative financial infrastructure, sanctions become survivable. Economically damaging to general populations, certainly, but fatal to regime strategic goals. The evidence suggests not necessarily. This logic appears to apply to Russia currently, applies to any resource-rich country facing Western economic pressure. Iran's playbook exists. The infrastructure can be replicated. The lesson appears to be that sanctions work until they generate adaptations, and the line between effective pressure and counterproductive adaptation may be thinner than policy assumed. But here's an additional layer that even Iran may not have fully anticipated. Remember those oil allocations to the IRGC, the crude they sell to fund operations? There's a documented exchange rate mechanism. The government values those oil barrels at 600,000 rials per euro for budget purposes, according to Iranian budget documents. The actual market rate exceeds 1 million rials per euro. That gap represents built-in profit. The IRGC sells the oil, converts, proceeds at market rates, and the difference flows to them. It's a subsidy, embedded in budget technicalities, potentially worth hundreds of millions, that most analysts would need to read detailed budget documents to discover. And there's more. The 2025 budget allows IRGCI-affiliated entities, specifically Khatom Alambia Construction Headquarters, to claim state assets worth up to $2 billion, according to budget law text, not as purchases. As debt settlement, the government allegedly owes them for construction projects. Instead of cash payment, they receive assets, ports, infrastructure, real estate. This isn't just oil revenue anymore. This appears to be systematic wealth transfer. The IRGC isn't just monetizing sanctions evasion. They're acquiring ownership stakes in Iran's economy, piece by piece, through budget mechanisms that hand them billions in assets. 20 years ago, the Revolutionary Guard was primarily a military organization with some business interests. Today, based on economic analysis, they appear to be an economic entity with military capabilities attached. They reportedly control ports that handle oil shipments, construction companies that build infrastructure, financial networks that move billions, and they have an independent revenue stream from oil that makes them less dependent on Iranian civilian government, and potentially more influential within power structures. This is an additional dimension. We didn't just fail to stop Iran's proxy funding, we may have inadvertently catalyzed the creation of a military-industrial economic complex inside Iran that appears more powerful than civilian government institutions. The IRGC answers to the supreme leader, not parliament. Their budget largely operates outside normal state channels with limited transparency, and they have billions in revenue flowing through systems that bypass traditional government oversight. Iran isn't just evading sanctions. Power structures appear to be reorganizing around the entities best positioned to evade sanctions. And those entities are using resources to fund regional activities that serve their interests, which may not always align perfectly with Iran's broader strategic calculations. When Hezbollah launched attacks into Israel in support of Hamas after October 7th, that wasn't necessarily a decision made by Iran's president or foreign ministry based on operational patterns. That was Hezbollah, funded substantially by the IRGC, making operational decisions. Iran has influence, certainly, but absolute operational control. The evidence suggests relationships are more complex, because money flows more directly from IRGC oil sales to proxy operations. Traditional command chains may get blurred. This is why the proxy network has become difficult to manage, even from Tehran's perspective, potentially. Hamas's October 7th operation surprised Iranian intelligence, according to multiple intelligence assessments. The IRGC funds Hamas, provides training, supplies, weapons, but orchestrate every tactical decision? Apparently not. They've enabled organizations that maintain some operational autonomy. Same pattern with Houthis. Iran provides missiles and money. But the decision to expand attacks on commercial shipping in the Red Sea, to broaden the conflict in ways that triggered international military response, that appears to be Houthi leadership calculating their interests, enabled by Iranian support, but not necessarily micromanaged by Tehran. We've created conditions where Iran's sanctions evasion doesn't just fund the regime, it funds a network of organizations with their own decision-making processes, all connected by Iranian money but not fully controlled by Iranian command. This may be more unpredictable than traditional state sponsorship because operational decisions get distributed. When a state directly controls operations, you can negotiate with, deter, or pressure that state. When a state enables proxies that operate with some autonomy, your options narrow. You can't hold Iran fully accountable for actions they didn't directly order, even if Iranian money made those actions possible. But you also can't ignore the enabling relationship. This represents strategic complexity that sanctions may have created, not just a sanctions evasion network, but power structures that morphed into something more complex than the original challenge we sought to address. We intended to pressure Iran's government. We may have empowered a parallel power structure that uses shadow oil revenue to run regional operations with decreasing direct oversight from Tehran, and the trend appears clear. The IRGC's share of oil revenue is growing, 50% currently by intelligence estimates. Could it reach 60% next year? 70%. At what threshold does the Revolutionary Guard control sufficient economic resources that they effectively become the dominant power center in Iran? With civilian government functioning more as administrative apparatus, we're potentially watching gradual militarization of a national economy, funded by black market conditions we created when we tried to shut down legal markets, and every barrel of crude reaching Chinese refineries, every $1 million flowing to proxy organizations, every missile launched from Lebanon or Yemen traces back to a fundamental strategic miscalculation. The assumption was economic pressure would force compliance. The result appears to be that pressure created alternative systems that made target entities more powerful. So let's synthesize what this means. This wasn't ultimately about Iran alone. This is about inherent limitations of economic coercion in globalized systems. We constructed the most comprehensive sanctions regime in modern history. We coordinated international cooperation, at least initially. We deployed full U.S. financial power, and the target adapted. More than adapted. Evidence suggests they transformed our pressure into revenue streams. Because sanctions, like any economic intervention, create their own dynamics, and in those dynamics, entities comfortable operating outside conventional systems can find advantages. The IRGC didn't start as an oil export organization. Sanctions appear to have made them into one. When we sanctioned the National Iranian Oil Company, when we made legitimate sales extremely difficult, when operations needed to go underground, who else but an organization with existing international networks, operational flexibility, and willingness to operate outside normal commerce was positioned to step in? We created conditions that handed them access to billions in annual revenue. They used it in predictable ways, based on their organizational interests, not to negotiate or comply with international pressure, but to fund operations advancing their agenda: proxy support, missile development, regional influence, nuclear program, running substantially on oil money flowing through channels that exist because we closed legal ones. This was the emergence of a system, not just Iran's evasion system, a potential template for how sanctioned states can survive and potentially thrive under economic pressure. Build shadow fleet, find willing buyers, use front companies, move money through non-traditional channels, embrace digital assets, exploit every enforcement gap. And we exist within this system today. Every sanction placed, Iran roots around. Every network designated, they rebuild under new names. Every choke point closed, another appears. This isn't because they're necessarily more sophisticated. It's because in this dynamic, evasion only requires one working channel. Enforcement requires blocking all channels simultaneously. The broader implication extends beyond Iran. Russia employs these tactics now. North Korea, Venezuela, any state facing serious economic pressure appears to be studying Iran's experience. Because Iran demonstrated it's feasible, you can be heavily sanctioned and still move billions, still fund military programs, still pursue strategic objectives. The costs are real. Economic pain is genuine, especially for ordinary populations. But regime survival and strategic capability maintenance, the evidence suggests both remain possible. And for authoritarian systems, survival represents the primary success metric. This may represent the new normal in international relations. Sanctions as a tool haven't become obsolete, but they've become more predictable. And predictability enables adaptation. Iran adapted. Others are learning. Dollar dominance as global reserve currency, the foundation of U.S. sanctions power, faces pressure partly because we've deployed it so extensively as a weapon. Countries explore alternatives when they calculate they might become future targets. China, Russia, even U.S. allies are quietly developing financial infrastructure bypassing dollar-denominated systems. Not because they prefer alternatives necessarily, but because they want options if sanctions pressure ever targets them. Iran's isolation accelerated this trend. They became an early case study in post-dollar trade. It's inefficient and expensive, but it functions, and that functionality changes strategic calculations globally. Meanwhile, the proxy network Iran enabled keeps operating: Hezbollah in Lebanon, Hamas in Gaza, Houthis in Yemen, Iraqi militias, all embedded in their respective conflicts, all with Iranian backing, all substantially funded by oil revenue sanctions, were designed to eliminate future Middle East conflicts. Whenever they occur, will likely involve these organizations. Future Red Sea shipping disruptions will likely come from Houthi capabilities built with Iranian resources. Future conflict escalations into Israel will likely involve Hezbollah using Iranian-funded systems. We can anticipate this because the funding continues and structural incentives haven't fundamentally changed. Iran's nuclear program, the original justification for intensifying sanctions, is more advanced now than in 2015. They're enriching uranium to 60% purity, approaching weapons-grade levels, according to IAEA reports from 2020. They're installing advanced centrifuges. They limit inspector access. All while under maximum pressure, sanctions designed to prevent these developments. Sanctions didn't stop the nuclear program. The nuclear deal temporarily constrained it, and we withdrew. Now we're back to sanctions, and Iran appears closer to potential nuclear capability than before. The leverage we believed we had, the economic pressure supposed to force compliance, it's demonstrably not producing intended results. Repeating the same approach while expecting different outcomes raises fundamental strategic questions. So, what's the alternative? That's the question without clean answers. Diplomacy requires mutual willingness to negotiate in good faith. Military action carries enormous risks and unpredictable consequences. Tighter sanctions appear to repeat the cycle. Loosening sanctions provides resources to the regime we're trying to pressure. We're potentially in a strategic situation partly of our own creation. And Iran, the country we attempted to isolate and coerce, is selling more oil now than in years based on tracking data, funding more proxy organizations, pursuing nuclear development, and operating an economic model that appears increasingly sanctions-resistant. This isn't a narrative about simple right and wrong. It's about incentives and consequences. We created incentives for Iran to develop shadow economy. They responded rationally to those incentives given to their interests. The consequences appear to be a more militarized Iran, a more complex Middle East, and a global financial system where alternatives to dollar dominance are actively under development. The system we inhabit was constructed incrementally over 40 years of sanctions, evasions, adaptations, and escalations. It's not disappearing. The IRGC likely won't voluntarily relinquish control of 50% of oil exports. The shadow fleet won't voluntarily disband. The proxy networks won't spontaneously dissolve. This may be the new relatively permanent state. Iran will continue selling oil through non-traditional channels. We'll continue sanctioning those channels. They'll develop new ones. The cycle perpetuates. And the populations bearing primary costs aren't necessarily IRGC commanders, benefiting financially, or Western policymakers designing sanctions. It's ordinary Iranians experiencing inflation and economic hardship. It's populations in Lebanon, Yemen, Iraq, and Gaza living in active conflict zones. It's the global economy managing shipping disruptions and energy market instability. We set out to prevent Iran from funding regional activities and pursuing nuclear capability. We appear to have built a system producing opposite outcomes, a system where hardline elements are financially stronger, proxy organizations are better funded, and nuclear programs are more advanced. That's not just a policy challenge. That's a systemic outcome. And until we acknowledge that sanctions alone won't solve this, that the overall strategy requires fundamental reconsideration, we're likely to keep repeating the cycle. More sanctions, more evasion, more shadow operations, more proxy activities, more instability. The IRGC might ironically thank us, because we created conditions that built their economic position. If this investigation into how sanctions produced unintended consequences revealed hidden financial systems running modern conflicts, consider hitting that like button. This is what conflict capital does. We follow money where conventional analysis doesn't go. We examine how economic weapons can become economic opportunities for their targets. If you want to understand how finance shapes warfare, how economic systems fund conflicts, and how well-intended policies can produce unexpected consequences, subscribe to this channel because the next investigation goes deeper. Stay curious, follow the money. And remember, the most important strategic battles often aren't fought on traditional battlefields. They're fought in financial ledgers, shipping manifests, and budget allocations that most people never read. Thanks for watching.